So let me do this to continue from the last meeting that we had. Just a little. Now, to continue from the last meeting, we reached where to how one can place a trade. I mean, you have covered how you can log in, you can place a trade, how you can determine how you place your lot size, and then also how you can place your take profit in your stop loss, either in a buy or in a set, maybe in a sell scenario. So I'm going to log in again. I'm going to log in again and I'll share my screen. After I share my screen, and I need to log in again. So once I log in, now you at a point where you place your trade and you done what we call you placed a take profit and a stop loss. You have determined the lot size, which I told you the default lot size is 0.01. So now what remains now, can you close? How can you close your trades? Now, hope you can see my screen. Can you? Can you see my screen?
Yes.
Okay. So, after you place your trades, now you need to maybe let's say you want to close those trades. Let me try to zoom in. After I zoom in, I illustrate how you close your trade. For someone having let's say you have a phone, you are using the mobile app. Now, for the one using a mobile app, you have to click on that specific trade. So let's say, but for one using a mobile application, you have to click on that specific trade, and then it will give you options for to either modify. That's number one. And then number two, to close the trade. Now, in the case of modify, for a mobile app, it's a direct case, but for one using a the web, you go to the stop loss levels or the take profit level, either which you want to modify. Of course, when you want to modify, you want to modify the take profit or the stop loss. Now, for one using a mobile app, to be a straight way forward, but for the one using a web, in case you have worries of how you can modify, you left click. Yeah, let me do that again. You left click on either stop loss or the take profit. Now, notice that when you left click on the open price, current price, or the trade itself, it can't open, but then you have to left click on the either stop loss or the take profit. So once you do that, now you can edit. You can edit that trade, either the stop loss or uh, the take profit. So let me edit the take profit to be 1838, and then you click on submit changes. So you click on submit changes after you have edited both the take profit and the stop loss, whichever you wanted to edit. When you submit changes, they just do that automatic. Number two, now let's say we want to close that trade. Also for the trader using a mobile application, it's also one way forward. Because once you click on that trade, you'll be given an option to close to your right, and then to your left, I think it's to modify. Now, for one using a web, to your right bottom side of the screen, for each trade that you have opened, you will see an option to close that trade. Now, I want to do an illustration by closing the first trade, that's the euro dollar, the buy scenario. So I just click on the close icon. Once I do that, I close this trade, and it can't be an open trade from my side. Now let me do that. I'll be given a message asking you, do you want to close this trade? Now it's either you say no or yes, but because you want to close the trade, I just click yes. Then you get a notification telling you that the order has been successful. Now I've closed. That's simply how you can close your trades. Also, let me try to close which one can I close now? Let me close this the euro dollar also. The same question. Do you want to close this trade? Yes. I think I had closed it earlier. That's why I'm getting this message. I'm just done the same trade, but then I've no it's not yet updated on my trades. Let me reload. After I've done that, that's closing the trade and also modifying the trade. Yeah, now it's okay. So the first trade, which was buy the euro dollar, I've closed that trade. Now I'm remaining with 5 trades. Now that's simply how you can close a trade. Also, number two, there's what we call the pending orders. The pending orders. How to go about this? Let's say you want to, let me still do the euro dollar. The lot size we said we have to make sure it's a 0.01 lot size. And then I want to do a sell order of the euro dollar. Now, if it's a sell order, I have to select the sell option. After that, then sell option. Now, after just below the trade icon, there is a box. And after that box, what reads here is open trade when rate is. Hope you can see that. Open trade when rate is. Now, you select that, that box. Now, the rate is what you enter. Let's say you want to open the trade when the rate is 1.1900, and your take profit, you have to place your take profit. Let's say it's at 1.18000, and your stop loss. I'd shown you this earlier. How to do this? You just edit directly, and then our stop loss will be 1.18. Looking at the current price, that's 1.185, 1.1815. I placed it to be 1.1830. Yeah, and then after that, let me just redo this. $1.1 open rate when trade is 1.1820. Yeah. Now and then after I've taken into account my take profit and my stop loss, I execute the trade. So execution is when you click on the trade icon, and then the trade is open. Now, for you to see your pending orders after the open trades, just below the chart, you have the open trades. The second icon is the pending orders, and the last icon is the trade history. Now, open trades is what is currently open. And then the pending orders is just, is it okay? I'm trying to, I don't know why it's taking time to, let me refresh again. So after you have executed those pending trades, they be under the pending orders. Now, what pending orders mean is that trade won't be open until, yeah. Now let me select this. Yeah, these are the trades. Now this trade won't be open until my level. Remember, we selected to be the trade to be open. For it to qualify to be under the open trades, we selected the trade to be open at a certain rate, and the rate was for our case was 1 point or is it 1.1820. That was the rate that our trade is supposed to open at. So once the trade reaches that level, it will be under the open trades. Yeah, it will be under open trades. Now, before it reaches that level, it will be under pending orders. And I've told you pending orders are the trades that are pending. For them to mean the trades pending before the rate at which you want to buy or sell that specific trade is reached. Now, If you want to if you want to delete this trade, just the same way for the open trades you can close. For the pending orders, you can just delete the orders. The your right bottom side of the screen, there are orders for you to close. That's deleting the trades. So illustrate by deleting the first trade, the first pending trade. Once I click that, I'll be asked, do you want to close this trade? That's deleting now the trade. You say yes. And the trade will close in a count of 5. I have to refresh this again for it to be updated. Now, after I've closed that trade, it will remain with the one pending order. Now, the characteristics of these pending orders is they don't take into account of your account value. What I mean is your account value won't be used for these trades until they are open. When they are pending, they just idle. They just idle trades. Like they won't consume your account value, and then they won't consume your basically they just won't consume your account value. So if you're, let's say, the trade after maybe waiting for it to be open, and then you realize that the trend is against what your pending order is, you can just delete those trades, just the same way I did before. So for this case, let me say again, I delete, select a yes. Now, lastly, I want to explain what your funds mean. On the top of your screen, you can see the available funds, used funds, and the account value, and then total profit and loss. Now, let's say you deposit $100 into your account. Your account value will be $100. And before you place a trade, used funds will be 0. Available funds will be equal to account value. That will be $100. Number 2, you have placed now the trades. For this case, let's say we have 1, 2, 3, 4, 5 trades. These trades, remember I told you before you place a trade, you have a look at the required margin. Have a look at the required margin. Now, the required margin is what we call the used funds. Now, for this case, there are 5 trades. You have opened 5 trades and they're running. There are no pending trades because you have closed all the trades. And the trade history is a list of your trades. They either mean the trades that have closed. Yeah. Now, the required margin gives a total of the used funds. In this case, the required margin for the euro dollar, gold dollar, dollar Japanese yen, and the euro dollar totals to 15.87. It's a constant figure. It doesn't change. Now, we are still working your account value was $100, but this case it's 11,129.80. It keeps on changing. That's your account value. And the available funds. Now let me explain this first. Your used funds will be subtracted from your account value. Yeah, will be subtracted from your account value. And For this case, used funds will remain constant, but the available funds and the account value will keep on changing because of the market volatility. Remember, the market keeps on going up and down or in a channel that's across. That will account for the changing figures of the account value and the available funds. Now, the used funds, I've told you, is the required margin. If you adjusted one trade, it will be a required margin of just one trade, and that will be the used funds. Now, the account value is the total of your account, the total of your, for this case, 11,130 plus, less, less, yeah? Account value less the used funds will give a total of the available funds for you to trade. Now, the total profit and loss, will give account to, the total profit and loss will give account to the total profit and loss. Yeah, I just wanted to mute someone. The total profit and loss is an account of your trades now. Your trade is a profit, profit is a loss, profit, profit. Now, profits you add, and then losses you less. Currently now, we have a standing order of 12.40, 12 no, it keeps on, let me just say roughly $12. You have a profit. If you decide to close all these trades right now, I close the trades with a $12 profit currently. I just close them at a $12 profit. If it was a loss, it will be a red figure here. And if we close, we'll also close at a loss. Yeah. Now, the available funds before now, we have these trades now, the 5 trades, and you want to place more trades. What you look at is not your account value, nor is it your used funds. You'll have a look at your available funds. The available funds will give you the go ahead of placing more trades. Now, if it's less, let me say like you had $100 and then you have used maybe $30 to open the trades. What remains is $70. That $70, it will give you a chance to place trades, yes, but then take note of the lot size, the required margin also. Because once you place that trade, there's a cost to opening that trade or to executing that trade. That's called the required margin. If it's more, let me say an example like $30. It costs you $30 to play that trade, and then your account balance, the available funds is $70, and then it will cost you, I've said $40. It means you remain with $30 to be as the available funds. Now, with that $30 means support the whole of your trades moving up and down or across the channel. That's across. Now, it's advisable that you place fewer trades depending on your account value. For someone having an account like this, 11,000, that's maybe a million Kenyan shillings. You can place as many trades as you want, also minding the required margin of those trades, and also minding their lot size. So basically, you have to take care of the available funds. That's why I usually tell you, when I send you the trade signals, I usually tell you that If you have an account value of maybe less than $40, just place a maximum of 3 trades. If you have an account value of $10, just place a maximum of 1 trade. Because the more trades you place, the more overburdened your account will be. And once your account is overburdened by the trades, you get maybe an email from your broker or a text message alerting you that your margin is below. Maybe that broker has a certain percentage that if you go below that, the broker will give you the notification. For now, for the case of the broker, if Expressa broker, then if your percentage margin goes below 100%, that for someone having a mobile application app, it gives you a better view of your margin percentage. It has to be above 100%. If it goes below 100%, you'll be getting notifications that margin call or margin alert. That's, I think, the title of how they frame those messages. You have a margin alert or a margin call, something of that sort. You get such kind of messages telling you either you add funds into your account or there's no option. You say you add funds to your account. Now, it's either you add funds to your account or the trades usually, or before I say this, usually before you get such a notification, most of your trades have gone against what you expected it to be. Now, you expect it to be a buy, but then that's an uptrend, but then the trend of the market is going down as a downtrend. Yeah, as a downtrend. In that case, you get more losses than profits. Now, when losses overburden the profits of your account of other trades, your trades, most of your trades are giving a negative figure, and your available funds cannot support the volatility of those trades. Now you get such a notifications that you need to add more funds. That's what we call a margin alert or margin call from your broker, texting you or emailing you that you need to add more funds. Now you have an option but to add funds or stand a chance to lose. I mean, now, if you don't add funds, your trades with the highest loss will be closed out automatically. So you'll be closed out of the market automatically. What I mean is, if you had let's say a loss ranging from $1 to $20, the loss with negative $20 will be closed. If that isn't enough to support your trades, and let's say the next loss you had is a $15, that will be closed also automatically. The next one, if it was a $9, it will be closed. The next time, if it was a $5, it will be closed. If it remains with -1, and then the profit, you had a specific trade with a profit of positive $2, that now will balance out. Now, when the system lesses for you the negative trades, the most high negative trades for you, it increases your margin. Or now it increases the margin to above 100% for the case of Expressa. You stay in the trades with maybe those 2 remaining trades, or if you lost your account, you will not be able to trade unless you add more or you fund your account again. Now, in this case, that's what we call blowing your account. You have had traders saying that I blew my account, I've blown my account. So that's what happens. You place a lot of trades randomly without analysis, the required analysis for you. without doing analysis better and well, and they'll cost you later. Once they cost you, you get more negatives or more in your account, and the funds in your account, or the money that you deposit in your account, cannot support your trades. Now you'll be closed out. That way you may end up losing blowing your account. So for you to trade again, you need to fund your account. Now, I think that's basically what I wanted us to share. And up to that point, I think I'm done. Maybe next time I told you earlier that I'll do maybe how can you, we do just a short analysis of how can you place your take profit in your stop loss, and maybe a little bit, we shall dive a little bit into some analysis on that day, because this is something that we can't just do in a one time. But for the sake of the competition that's coming soon, maybe next week, I see it better to show you how to do all about this, to about this, and then I'll be sending you the trade signals. You can take advantage of that. Maybe you might be a winner. You never know. That will be a motivation for you to do more. But what I need is, what I can tell you is just have that passion. If you have that passion, you can go far. And that you have to push a little harder. You have to work harder to put in more efforts, that dedication to do more research, to keep on learning. That way, that's just the best thing I can tell you. Because right now I can't tell you that you know how to manage your risk, or how best you can do your risk management depending on your account. That's something for another day. But for now, passion, hard work, patient, be patient, and also have that interest. Yeah. So up to that point, I think I'm done. I stop sharing the screen. And I call it a day. Yeah. Bye-bye. For those who never made it to attend, you can, I'm going to upload this in my YouTube channel. So please, you can be there. It's just Captain Investment. Just search that, just Captain Investment, and you'll have a view of the a view of this. So I'll call it a day. Sasa.